Skeena Resources is a junior Canadian mining exploration focused company focused on developing prospective precious metals and base metals properties in the Golden Triangle of Northwest British Columbia. Please help me in welcoming Walter Coles.
Thanks for that introduction, Anthony. It's a pleasure to be here kicking off the symposium this morning. As Anthony mentioned, Skeena is a BC-focused mineral exploration company, and we think there are real advantages to being in British Columbia. In fact, there's a panel discussion today at 11 o'clock where we have members of the government of British Columbia as well as First Nations representatives on that panel to talk about the collaboration between government, industry, and First Nations in BC. And we think that's what really sets the province apart as a jurisdiction to do mineral exploration and build mines in the world. So with that, I'll dive into our particular company. We're in the northwest section of British Columbia. It's called the Golden Triangle. And it's an area that has a illustrious history of very profitable mines going back 100 years ago. Two of the mines that we have acquired are the SK mine and the Snip mine, and these were very high-grade gold and silver mines in British Columbia. We also have a team of geologists and board of directors who have generated a great deal of acclaim for the mining industry. Our chairman is Ron Nedolitsky, who was credited with the discovery of Snip and SK. Here's the map of the Golden Triangle, and here are four of our projects. GJ project is a copper porphyry, and then we have Snip and SK, the precious metals projects, and then we have Porter, Idaho, down at the bottom. So I'm going to talk about each of these quickly. But back to that theme of why British Columbia is such a great place to be developing a mine or looking for mines. And I just say one word: infrastructure. In the past 5 years, the province led the way for building the northern transmission line, as well as we've got 3 new run-of-river hydroelectric facilities. The combined investment there is about $2 billion, and as a result of that, we have 6 cents per kilowatt hour electricity. That is pretty amazing when you think about Chile, where the cost of electricity could be as high as 20 cents per kilowatt hour. It's a real competitive advantage in British Columbia. And you'll see that our 3 projects are all very close to that red line, which is the transmission line. So, great place to be developing mines. The Snip mine operated from 1991 until 1999. It produced 1.1 million ounces of gold at an average grade of just under an ounce per ton. So, incredibly high grade mine. If you think back to the price of gold during that period, in 1991 the price of gold was $450 an ounce, and in 99 when they shut this mine down it was $250 an ounce. That's why we wanted to acquire this mine. Our thinking was pretty simple. If they were required to use Homestake was required to use a 24-gram cutoff grade when this mine shut down, our thought was, gosh, if we could go in and reopen this mine up and use something that's more typical today, like a 5-gram cutoff, there could be a lot of gold mineralization still left here. So that's our idea. That was our idea with acquiring this mine from Barrick. We closed the acquisition from Barrick in August, so just less than a year ago, and we're drilling this project right now from underground. So on the left side of the screen is the historic area that was mined. It was called the Twin Zone, and we're focused on the remnants of the Twin Zone and also a new area which we call the 200-foot wall. And this is really exciting to us because it's an opportunity to find another Twin Zone. And keep in mind, as I said, the average grade out of the Twin Zone was almost an ounce per ton. So if we could find another Twin Zone, it would be an incredible home run for our company. Now I'm going to show you why we think there's a decent chance of finding another Twin Zone. On this section, there's a single drill hole that goes 200 meters down from the historic Twin Zone, which was that sort of blue area there. So we've got a single drill hole in this section that goes down 200 meters, and it stopped in 45 gram per ton gold mineralization over 4 meters. So that's where we're targeting right now for our drill program that's ongoing. Here's another cross-section that shows more very high-grade intercepts. We drilled a hole from surface and hit 16 grams over 13 meters, again in this 200 footwall area. So more hints that there's something very exciting here. We're also focused on the remnant areas that I mentioned before, and here's some more intersections that we put out recently. 91 grams over 4 meters, 35 grams over 4 meters, 19 grams over 12 meters. So pretty exciting intercepts that were targeted here. And this is why we love this area. It's high grade, high grade, high grade. Next mine I'll talk about is the SK Creek mine. We have an option on this mine from Barrick. Again, it operated from 1994 until 2008. It produced 3.3 million ounces of gold and 160 million ounces of silver. Amazingly, that's from only 2.2 million tons of ore. So incredibly high grade. Again, same sort of theme. When this mine was operating, the price of gold was much lower. They were using a cutoff grade of 15 grams for the mill feed and 30 grams for the direct ship ore. So our idea is, again, very simple. If we go back into this mine, what would be left today that would be economic that wasn't economic when they shut down this mine? And so we did an exercise here. We pretended it was 2005, and we took all the assay data, said how much is left, and it doesn't really look like a lot. But when you switch to 2017 gold prices, suddenly it lights up with a lot of gold mineralization left over. So we'll be drilling this summer. To give you an idea of the tenor of some of the grades that are left here, we call this section 21C, and some of the historic cross-sections that were never mined include 12 grams over 40 meters. Let's see, what's another one? 17 grams over 21 meters. Lots of attractive stuff. Here's another area that has even more spectacular historic mineralization that wasn't mined. 63 grams over 35 meters, 55 grams over 24. Again, this is what the Golden Triangle is known for, grade. So right now we're drilling, as I mentioned, on SNP. We'll start putting out assay results in the next week, and we'll have assay results for the next couple months on a periodic basis. SK, we have our permit applications in, and we expect to be drilling this SK project sometime in late July. Last project I'll just touch on briefly is our copper gold porphyry. We optioned this from Teck in 2015. We put out a PEA on it. Again, it's very close to a highway, close to electricity. Strip ratio when we start mining is basically 0. 25-year mine life, $200 million capex, and when we look at $3 gold, $3 copper, $1,300 gold, it generates a after-tax NPV of $412 million, an IRR of 24% after-tax. Pretty attractive numbers here on this project. So those are the 3 projects I'm going to talk that I'm only going to talk about today, but we're really excited about what's going on in the Golden Triangle, and I just say thank you for your attention this morning.
Walter, stay up there for a second. Okay. Do we have, first of all, open it up to the floor if there's any questions for Walter? Anybody? Okay, because I do have one. What do you think will be the main catalyst for share price valuation in terms of news flow coming?
Well, I think in the next, say, 6 to 8 weeks, we'll start producing drill holes out of that 200 footwall area. And as I mentioned, if we can discover another twin zone, this was the SNP mine, I'm told, was Cominco's most profitable mine when it was operating. So finding another twin zone is a home run. And we'll have some inclination whether we succeed or not in the next 2 months.
All right, so everybody look out for that. That's not very far away. So
Thank
best
you.
of luck, Walter.
Thanks.
Thank you.